students, welcome to Sunil's tutorial. I am Sunil Mirwani and today we will be doing the chapter called as Fire. We are going to do illustration 3. We are going to do illustration 3 on page 550. Let's read the sum first, guys. On 17th June 2004, a fire occurred in the premises of Mr. Bookworm, a bookseller. Most of the stock was destroyed and the cost of the salvaged stock was 11,200. In addition, some stock was salvaged in damaged condition and its value is estimated at 10,400. The following particulars are available from the books of accounts. Stock at the close of accounts on 31st December 2003, purchases, and they've given you the profit margin. Now the year in which fire occurs, you will not be making the account for the full year. You will be making account from the beginning of the year to the date of the fire. So the year in which fire occurs, the trading account of that year is called as memorandum of trading account. What is memorandum of trading account? It is the trading account for the year in which fire has occurred. Now when does your year begin? It starts on 1st Jan 04 to the date of fire. Date of fire is 17th June 04. Particulars, rupees, particulars, rupees. Right, let's see this. Stock at the close of accounts on 31st December 2003 was 83,500. Last year's closing stock was 83,500. Last year's closing stock will be current year's opening stock. So write to opening stock 83,500. Next, they've given you that purchases from 1st Jan to 17th June was 1,12,000. Purchases, trading account on the debit side, 1,12,000. Next, sales for the period was 1,54,000. On the credit side, by sales, 1,54,000. Next, on the basis of the past 3 years, it appears that the average gross profit is 25% on sales. Second thing that you have to do is you have to find out your gross profit. Gross profit is given by the formula gross profit ratio into net sales. Gross profit ratio is given to you as 25%. Gross profit ratio is given to you as 25%. Net sales is 1,54,000. So when you do 25% of 1,54,000, you will get 38,500. This figure is to be written in trading account on the debit side as to gross profit. Gross profit is 38,500. Now you tally. Now when you tally, you add the debit side. When you add the debit side, you will get this as 2,34,000. 2,34,000. The tallying figure is called as by closing stock. The tallying figure is called as by closing stock, which is 80,000. Once you get that, the third thing that you have to make is statement of claim. In that, first you will write closing stock 80,000. Now in the beginning they have given you some salvage. They are saying that what is salvage? Goods which are recovered in damaged condition is called as salvage. Right? You are supposed to less the salvage from closing stock. Right? Now they are saying that cost of salvage stock being 11,200 and there is more salvage here. And in addition, some stock was salvaged in damaged condition. Its value is estimated at 10,400. So 21,600 is my total salvage. Therefore, my loss by fire is going to be 80,000 minus 21,600, which comes to 58,400. Once I know my loss by fire, then I can find out my insurance claim. How do I find out insurance claim? Claim is given by the formula loss by fire upon closing stock into policy amount. My loss by fire is 58,400, closing stock is 80,000. The policy, they're saying that the stock is insured for 75,000. Policy amount is 75,000. Right? Now, remember one more thing here, guys, that you will use this formula only if the policy amount is less than the closing stock. If the policy amount is more than the closing stock, then the entire loss by fire will be the claim. Okay? Now let's calculate this. When you calculate this, you will get 54,750. So the claim that you will get from insurance company is 54,750. Right? You multiply all this, you will get your claim amount. Next, let's move on to the next sum, guys. Let's see illustration 4, page 551. Badkismat Limited. Now I'll explain this sum to you first. Badkismat Limited has a shop and a godown. It has a shop. First I'll explain to you exactly what's going on in the sum, because you have two business establishments here. You have a shop and you have a godown. Right? Badkismat Limited has a shop and a godown. Goods are transferred from the godown to the shop. Let's make this way. Put the godown first, and then we put the shop. Goods are transferred from the godown to the shop, and then they are sold from the shop. Goods are transferred from the godown to the shop every day in the morning. The inventory in the godown is insured for 25 lakhs. Your godown policy amount is 25 lakhs. Right? Next, while the shop is insured for 5 lakhs, the policy amount of the shop is 5 lakhs. They are saying that on 31st December, the inventory in godown at the cost of 24 lakhs, whereas the inventory in shop is 6 lakhs. Now see, your purchase will be here. This is transfer, and this will be your sales. Sales return will come here. This will be your transfer, and from here you will have purchase return. Right? So that's how the movement of goods is going to take place. Okay. Now the reason why I'm showing you this is either one of them is going to catch fire. A fire occurred in the midnight on 16-17 April. A fire occurred in the shop. So you have a fire in the shop. That means now you will be considering only those transactions that pertain to shop. You will not consider those transactions that pertain to godown. Do you understand this? So first, let's make a memorandum of trading account. Memorandum of trading. Your year begins on. They are saying that your year begins on 1st Jan 04 and fire occurred on 17 April 04. Particulars, rupees, particulars, rupees. Right? Now remember, you have a fire in the shop. So you have to consider only those transactions that pertain to fire, that pertain to shop. You will not consider transactions pertaining to the godown. Okay. Now, purchase. I will not record purchase. Why will I not record purchase? Because it pertains to go down. Returns to supplier, that is your purchase return. Again, that is a transaction that pertains to go down, therefore I will not record this. Transfer to shop. To transfer to shop. Now transfer to shop, they've given you for different months. For Jan it is 17 lakhs, for Feb it is 20 lakhs, for March it is 25 lakhs, and for April it is 7 lakhs. So 20 plus 25, 45, 55, 55, 62, 45, 52, 57. This is going to be 66 lakh 50,000. Someone check that please. 17 plus 20 plus 25 plus 7. 69 lakhs. Transfer to shop is 69 lakhs. Everyone's understood how I got the 69 lakhs? I added all the transfer. Returns from shop, right? You have returns from shop is 75,000, 1 lakh, 25,000 and 50,000. So this is going to be less returns. Someone add all those returns.
250.
Excuse me?
250.
2,50,000. So this will come to 67 lakh, 66 lakh 50,000. Right? Now, just before the table they said the inventory in the shop at cost is 6 lakhs. That means they've given you that the opening stock in the shop is worth 6 lakhs. The inventory in shop is worth 6 lakhs. Sales. By sales. Now when you have sales, there are two different types of sales they have given you. One is at the rate of 12%. Right? At the rate of 12% you have 8 lakhs plus 9 lakhs plus 10 lakhs plus 4 lakhs. 19 and 8, 27, 31 lakhs. And at the rate of 8% is going to be 10 lakhs plus 12 plus 14 plus 4. So this is 24, 34, 36, 36 and 4, 40 lakhs. Excuse me? What is? I'll tell you why I need the rate. They've given you the rate in the sum, right? They've given you that certain part of the sales is made at 12% and certain part at 8%. Now what does that 12% and 8% signify? It signifies the profit that the company is making, right? So this is going to be to gross profit at the rate of 12%. So you have to calculate 12% of 31 lakhs. Someone please calculate 12% of 31 lakhs. 3,72,000. And at the rate of 8%, 8% of 40 lakhs, 3,20,000. So this will be 6,92,000. Right? They've given you the rate. I directly calculated the profit on the rate. Fine. Do we get this in here? Now, once you have this, tally this. So when you add this, you will get this answer as 79,42,000. Someone check that please. The difference is to be written as by closing stock. So closing stock will be 79,42,000 minus 71 lakhs. That is going to be 8,42,000. Right? Once I get the closing stock, I don't need the gross profit margin. Next, I need to make statement of claim. Statement of claim is also called as statement of loss by fire. Okay. Let's see this. First of all, I need closing stock. Closing stock we just found out is 8,42,000 less salvage. Let's see how much is the salvage given to you. They are saying that the entire stock was engulfed, goods costing 10,000 could be salvaged intact and the balance in spoiled condition. Right? So first of all, salvage is 10,000. So that leaves you with 8,32,000, right? Expenses of firefighting operation are 5,000. I'll come to that a little later. Goods retrieved in spoiled condition could be sold at 30% of the cost. This is goods in spoiled condition. They are saying goods in spoiled condition could be sold at 30% less salvage at the rate of 30%. This, when I sell in the market, I'm going to get 30% of this. Someone get me how much is that? 249,600. So in that case, my loss by fire is going to be 8,32,000 minus 2,49,600, which will come to 5,82,400. So I've got my loss by fire. Now let's find out the claim. Claim is loss upon closing stock into policy. Loss 5,82,400. Closing stock. Closing stock was 8,42,000. Policy. Policy is of 5 lakhs. Right? Now, when you solve this, you will get this answer as 3,45,843. Now this is not going to be the exact claim that you will be getting. Reason? Because you have spent some money on firefighting. The amount that is spent for firefighting and firefighting expense. Firefighting expenses are 5,000. So the net amount that I will get, my final claim, is going to be 3,50,843. So the net amount that I will get from insurance company is going to be 3,50,843. Next, let's see the next sum, guys. Let's see sum number 5. Page 551. On 30th June 2004, an accidental fire destroyed a major part of the stock of the godown of Messrs. Jaya Associates. Stock of 30,000 could be salvaged but not their stock leisure. The fire insurance policy was in force, under which the sum insured was 3,50,000. You are given the following data from the available records: sales, opening stock, purchase, normal gross profit ratio, and firefighting expenses. Okay, let's make memorandum of trading account. First thing that we will make is memorandum of trading. Right, as on what date did the fire? On what date does the year start? They are saying that 1st April 2004. April 04, and the fire occurred on 30th June 04. Particulars rupees, particulars, rupees. Let's start. They're saying that, let's first see the records. Total sales invoice during the period from April to June was 30,20,000. An analysis showed that goods of value of 3 lakhs have been returned to customer before the date, right? Before the date of fire. Okay, so let's see this. By sales, they're saying that sales are 30,20,000. 30,20,000, out of which you have returned to the customer goods of the value of 3 lakhs. Goods of value of 3 lakhs have been returned to the customer. So you have actually had a sales of 27,20,000. Fine, do we get this in clear? Next, opening stock on 1st April was 2,20,000, including stock of 20,000 being lower than cost. The net value subsequently realized to opening stock is 2,20,000. Now guys, when you have a shop, you will always have some amount of damaged goods with you. These damaged goods that you have are called as abnormal goods. When you are doing insurance claim, when you are calculating your insurance claim, you have to calculate your insurance claim without the abnormal goods. Now this entry says that opening stock is 2,20,000, including stock of value 20,000 being lower than cost. If the value of any particular goods is lower than cost, that means it has to be abnormal. Why are you selling it at loss? Because it is abnormal goods. When you are doing fire, you have to remember one basic rule. You always subtract abnormal. So I'll say less abnormal 20,000. Everyone's understood? This abnormal entry is supposed to be the most tricky entry in fire. Okay, so this comes out to 2 lakhs. Our opening stock comes out to 2 lakhs. Included stock of value of 20,000 being lower than cost, and the net value subsequently realized. Net value subsequently realized, that means this product has been sold. Net value subsequently realized, when will you get the money? When you sell the product in the market, right? If it has been sold, that means this has also been included in sales. My sales includes sales of abnormal goods also. What did I tell you? Whatever happens, you deduct your abnormal. Abnormal 20,000. So this will be 27 lakhs. Next, purchases from 1st April to 30th June is 21 lakhs. To purchase 21 lakhs. Next, the normal gross profit ratio is given to you. Okay, normal gross profit ratio is given to you. That means you can find out gross profit. Gross profit is given by the formula gross profit ratio into net sales. 33 1/3%. Now guys, when you are doing this on the calci, please see how you will do this. 1/3 is 1 divided by 3, which will give you 0.33 plus 33. That means 33 1/3% is 33.33 into 27 lakhs. Now guys, on the calci, first type 27 lakhs, then into 33.33. Take that 33 till the end, only then you will get the right answer. Just don't take it up to 2 decimal places. Take it till the end, only then you will get the right answer. So 0.3333 till the end of the display. When you take that, then press your percentage key, you will get your answer. How much does that come to? 9 lakhs.
9 lakhs.
right? So my gross profit is going to be 9 lakhs. Fine, do we get this thing clear? So this is to gross profit carried down 9 lakhs, right? Everyone's got this 9 lakhs. Now, once I have this, then I will tally my trading memorandum of trading account. This is 32 lakhs. By closing stock. The difference is called as closing stock, which is going to be 5 lakhs. So I've got my closing stock, which is 5 lakhs. Once you have this, then let's make statement of claim. Statement of claim. Closing stock. Closing stock is 5 lakhs less salvage. Someone tell me how much is the salvage? Let's see the sum. They're saying that goods cost, stock costing 30,000 could be salvage. So my salvage is 30,000. So my loss by fire is going to be 4,70,000. Right? Once I have my loss by fire, then I can calculate my claim. Claim is going to be given by the formula. Claim is nothing but loss upon closing stock into policy amount. Loss is 4,70,000. Closing stock is 5 lakhs. And the policy amount is given to you 3,50,000. Someone please help me calculate this. How much is this? 329,000. 3,29,000, right? Plus firefighting expenses. Firefighting expenses are given to you as 30,000. So my claim is going to be 3,59,000. Fine, do we get this thing clear? Next, let's move on to the next sum, guys. Illustration 6, page 552. They're saying a fire occurred in the premises of Agni on 25th August 2003, where a large part of the stock was destroyed. Salvage is 15,000. The following details are given to you. Straightforward sum. Let's make the memorandum of trading account. As on or for the year ending first Jan 03 to fire occurred on 25th August 03. Particulars rupees, right? Particulars rupees. Let's start. The revenue purchases is 85,000. Two purchases 85,000. Next, revenue sales is 90,000. Y sales is 90,000. Next, goods costing 5,000 were taken by Agni for personal use. Now guys, when you're doing fire, when there's a drawings, you have to deduct the drawings from purchase. Generally when goods are going out, our general system is you write it in the trading account on the credit side, but when you're doing fire, whatever goods have been withdrawn for personal use have to be deducted from purchases. So less drawings 5,000, so this comes out to 80,000. Next, cost price of stock on 1st Jan 2003 to opening stock is given to you as 40,000, right? Over the past year, Agni has been selling goods at a consistent profit margin of 33 1/3%. Let's find out gross profit. Gross profit is gross profit ratio into net sales. 33.33. Remember, take the 33 till the end. Into sales 90,000. Right? Comes to 30,000. So my gross profit is 30,000. Next. That's it. Let's tally this. 150, 1,50,000 by closing stock 60,000. Right? Next, let's make statement of claim. You have closing stock. Closing stock is 60,000. Less salvage. Let's see how much is the salvage. Salvage is given to you right in the beginning, which is 15,000. So you will get your loss by fire is going to be 45,000. Right? Once I have loss by fire, then I can find out the claim amount. Claim is loss upon closing stock into policy amount. Loss is 45,000. Closing stock is 60,000 into policy amount. They are saying that insurance policy of 50,000 has been taken. So when you simplify this, you should get this as 37,500. There is no firefighting expense in this. So your final claim is going to be 37,500. Right? We'll stop this here for the day. Thank you very much.